But look at me over here cat watching for my mom while she's on a cruise. Yeah, yikes. Next year, I'm definitely going to be on that one. Now, here in this video, we're going to get into everything you need to know on the day today with AMC stock. AMC is down 1.29%. It's really a muted day overall as bonds are not trading. But there is an aspect of bullishness to some parts of our markets. Now, we're going to get into everything going on with AMC. We do have some numbers for Black Friday, at least for online shopping, and they are looking encouraging. So we have a lot to get into. I'm not going to break it all down here in the intro. Hit that like button as well as subscribe to the channel. Source your comments, questions, or concerns down below in the comments section, guys. So first things first, like I said, AMC stock is down 1.36%. You are at $6.90 per share. Not exactly a bullish day, but it's not a terrible day for AMC stock as well. It's not a 5 or 10% declining day. It could be a lot worse. We've seen a lot worse for AMC, but it is unfortunate, at least right now. AMC is down about 9 cents, 10 cents or so here on the day, and you're at $6.90. So if you can go green, that would put AMC stock at about $7 per share, and that's what I want to see throughout the end of the day today. It would be really good if AMC could just be slightly green, just be above $7 per share. I would welcome that with literally open arms. Now, let's get into this Black Friday situation first. So it says Thanksgiving Day online sales jump as discounts motivate holiday shoppers. Consumers spent $5.6 billion online on Thanksgiving Day, a jump of 5.5% year over year, according to Adobe Analytics. The uptick reflects that holiday shoppers are buying more of their gifts online and responding to discounts. Hot sellers included Barbie items, gaming consoles, Bluetooth speakers, Adobe found. And it does look like overall, we're expecting between 3 and 4% year over year growth for holiday spending. And that's for the months of November and December. That is according to the National Retail Federation's forecast. That would be a significant slowing from the holiday sales growth seen during the pandemic and a return to more typical growth levels prior to the Rona crisis. Now, Adobe's data covers more than 1 trillion visits to U.S. online retail websites, 100 million unique items, and 18 total product categories. It does not cover in-store purchases, where the majority of U.S. holiday purchases still take place. Last year, about 70% of total holiday sales took place in physical retail locations, according to the NRF. So far, so good. So far, it looks like the consumer is still spending, and that's going to be great news because a lot of your yearly GDP comes this time of the year with spending. So if spending were to slow down and be like lower year over year, let's say, your expectations for GDP would go down big time. And then you would have to sit here and say, hey, are we in a recession? Now, remember this. The markets care the most about a recession, right? That's why bad data was seen as good for a while. That's because the inflation problems were prevalent, and worsening economic data meant the Fed wouldn't have to raise rates as much. But once you get to a point in which I think we're at right now, where inflation has fallen a lot, and it looks like rate cuts are coming just because inflation has fallen a lot and rates are still really high. If you start to see the economy just absolutely deteriorating, that's not going to be seen as a good thing for markets anymore. So I'm watching to see that flip. But long story short, the longer the economy can hold out, the odds of a soft landing do go even higher. And theoretically, maybe the Fed would even cut rates a little bit more if it looks like inflation is falling and the economy is not thriving, but at least holding up. And especially in 2024, I talked about this in previous videos. The last thing you want, literally the last thing you want, if you are the incumbent president going for re-election, is a recession during an election year. Yeah, you're not going to win that if you are in a recession in 2024. So, yeah, there's a lot of incentive to stay out of a recession. So I think a recession could actually be a bigger problem for 2025, in my personal opinion. Now, today, well, it's not a huge day for stocks. Stocks are kind of doing their own thing. Not a, it's Black Friday. Really not too much actually going on today. If we take a look at the broader indexes, let this go ahead and load. The Dow is up about 0.25%. S&P is flat. NASDAQ is slightly down 0.15%. The Russell 2000 is actually up 0.5%. I do think today you're continuing to see that great shift of capital. This is something I've talked about for a while now that I think will continue for a while. There's trillions of dollars on the sidelines, right? There's $6 trillion in money market funds, could be even more than that. And when you look at the total market cap of the Russell 2000 as a group are the stocks that are going to benefit the most from rates going lower. It's where a lot of hedge funds and institutions are going to want to position for 2024. Not in just dog crap companies, right? The companies that are terrible companies that should have never been where they were in 2021, they're not coming back. Capital is not going to go into just any stock in the Russell 2000. Okay, that's not going to happen. But high quality names, household names, those are going to be the guys that do get potentially, these trillions of dollars that flow into them. Now, the entire market cap of the Russell 2000 is 2.23 trillion. You have 6 trillion in money market funds alone, let alone you have about $20 trillion out there in cash alone, in people's bank accounts and brokerage accounts, things of that nature. It's not going to take a whole lot of that money heading into Russell 2000 stocks to get these stocks to do well relative to the entire market cap of the Russell 2000. The amount of money out there, the amount of money on the sidelines of this market is dramatically higher. So I think that will be to AMC's benefit. Again, it's not going to happen overnight, but I think today is just another validation of that great shift of capital that is currently happening as of right now. So take note of today where the Russell is even outperforming the NASDAQ. And really not too much is actually happening today. If you take a look at 10-year treasury yields, 10-year treasury yields are up like 6.5 basis points. But you're still getting money flowing into the Russell 2000. That's because markets are expecting rate cuts in 2024, and Russell 2000 stocks are the ones that are going to benefit from it. Regardless of the day-by-day swings of the 10-year treasury, that doesn't matter as much as of right now. Now, the percentage of stocks above their 50-day moving average today is going up again at 66.5%, at least right now. What you've seen back in July was about 76%. I do think stocks here could be due for a little bit of a pullback. If you look at the broader markets themselves, you're obviously finding a lot of resistance around 390 here on the triple Qs. Overall, you're in a cup and handle formation. I do expect stocks to trade sideways here and then ultimately make our way to new all-time highs. Now let's go ahead and get into all of your AMC stock specific data today. We don't have any data for option activity as of so far. We'll see if later today that does update. But for today, if you're looking at the volume percentage of calls to puts, calls is sitting at about 69.5%, puts at about 30.5%. So another almost 2-to-1 ratio for calls compared to puts, a little bit over 2-to-1 actually. So that is a pretty good sign here today. People are taking on some bullish positions. If we take a look at the short data here, you have a cost to borrow max of 7.26%, cost to borrow average 6.05%, cost to borrow minimum sitting at about 1.04%. I don't think these numbers are accurate at all, so take them with a big grain of salt, a truckload of salt. Short interest percentage of free float at 9.14%. I think this number could be well over 100% at this point based on some of the option activity we've seen recently. It looks like a lot of these positions are being hidden as of right now, considering the SEC new rule change goes into effect later this month. We'll probably get that data in the month of December, though it's going to take some time to aggregate that and actually get that posted to an online website. But we will definitely keep you guys posted. I think we're all curious to see what kind of collateral is backing AMC short positions, who is actually short, what broker is actually facilitating those trades, things of that nature. I'm confident that you want to see that information. Now, you have $126.38 million worth of short positions, days cover 0.75, 18.08 million shares that are currently sold short, shares out on loan 13.71 million, cost to borrow 1.27, utilization of 31.36, and a short score of 54.44 out of 100. And look at that, the Stonko tracker data looks like it is glitching out quite a bit here today. Says there's zero option activity. There's no calls in the money or out the money for this Friday. Obviously, that's not true. There's a lot of activity this week, and there's really a lot of activity for all of your major expirations. Your next major expiration is going to be December 15th. That is going to be a period of time in which you want to watch. I believe there's already over 150,000 calls and around 70,000 puts or so for that expiration. So could be a lot of activity around there as well, but for whatever reason, the data is simply just not coming up here on the day today. Now, a quick look back at the technicals. AMC stock is still at $6.90 per share. Again, I would love to see the stock above $7 per share. That would be a break-even day today. If you could be green by the end of the day, that would be really good news. The RSI at 33.02, you're on borderline oversold territory. I think just looking at the stock, you're definitely oversold anyways. So to see a bounce here wouldn't surprise me all too much. You did see a bounce yesterday. The stock was up over 5%. Unfortunately, not continuing today, but I do think this great shift of capital, again, will continue to affect AMC stock in a bullish way. The biggest problem we have is all of the dilution from Adam Aaron. Hopefully that comes to an end. Hopefully it looks obvious to them at this point. They cannot continue to dilute shareholders or the stock is going to plummet even further. And then AMC as a business is going to be in a world of trouble. If you take a look at the MACD, that is slightly negative, but nothing to be concerned with as of right now also, guys. So there is that. That's really all you need to know. As far as the economic data, we did have some economic data that came out today. That was the PMI. So your global composite PMI came in at 50.7, a little bit higher than expectations. S&P Global Manufacturing PMI came in at 49.4, a little bit worse than expectations. And S&P Global Services PMI came in at 50.8. That was a little better than expected. So kind of a mixed bag across the board as far as this composite PMI data, this flash PMI data. Nothing to really draw any conclusions from. It's really not causing a movement today. Typically, the day after Thanksgiving tends to be pretty bullish. So I think you're kind of seeing this back and forth, right? Russell 2000 is doing well. Some of your other stocks and indexes maybe not so much today. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.